Here is the new weekly outlook. We're going to cover everything that you guys need to know heading into what is going to be one of the most important trading weeks of 2026 so far. So from a macro perspective, we have the geopolitical situation in the Middle East. We also have the biggest earnings week of the year from big tech. We have 5 central bank decisions that are going to be coming out this week. And then also the final press conference of Jerome Powell as the Fed chair. And all of that's going to be happening between today and Thursday. So let's start off with the macro picture. The main thing that we have to keep in mind as interest rates are coming out, we're trading, some of the CPI data that's coming out, core PCE, and, all the other stuff with the economic data. The main thing that everything that, if we're trading currencies, commodities, index, whatever, everything is trading off of one biggest headline, and that is going to be the US-Iran conflict and the Strait of Hormuz. The strait has been effectively closed for about 9 weeks now, and the IEA, which is the International Energy Agency, has called this the largest energy supply shock on record. So oil is currently above $95. It has been trading like that for a while. We did have a massive corrective move earlier in April, and then we came right back above the 95 point. And that's a barrel. And because oil is that high, inflation expectations have also spiked, which means that central banks cannot cut rates right now, which means that real yields are elevated, which is pressing on gold and silver. And that's why we're seeing that even in times of war, gold has been selling off. And that's the macro environment in the shortest form. So keep that in your head for everything else that we're going to be talking about when it comes to the rest of the fundamentals, the market sentiment, and the technical side. We talked about the central bank decisions that are going to be coming out. So today we have BOJ interest rates which are going to be coming out in just a little bit here. For the most part, we're expecting that they're going to maintain those interest rates at 0.75% here, which is almost certainly what we're going to get. But what is more important is what BOJ governor is going to say at the press conference after. If he sounds hawkish about future hikes, then we will see that the yen will strengthen and GBP JPY and USD JPY are going to drop pretty fast. We're going to move to the technical side here in just a little bit, but just to give you more context of why that's important, is because GBP JPY is sitting at, for almost a decade, we have not come back and revisited these highs. So it's sitting at pretty much an all-time high at the moment. And same thing with USD JPY as well, sitting around to that 160 point. But if BOJ governor sounds cautious and pushes the timeline for the next hike even further out, then the yen will stay weak and these pairs are going to remain bid. So we're going to come back to the technical levels here in just a moment. But after today, the next big day is going to be Wednesday, where we have interest rates coming out from the US. We are going to be trading this live together. 100% probability of a hold at 3.75% to about 50% to 75%. We're talking in ranges always. And that decision itself is not going to be the trade here. The more important thing is going to be Wednesday is Jerome Powell's final press conference as Fed chair. His term expires May 15th. And the markets are also expecting a Senate vote on Kevin Warsh's nomination to replace him on the evening of Wednesday, April 29th. Warsh is seen as potentially more dovish than Powell, meaning that if he gets confirmed, then the market will start pricing in cuts even sooner. And that is dollar negative, but euro positive and gold positive. Powell's final words and Warsh's vote are going to be the catalyst that we need to watch out for on Wednesday. That's really the market sentiment that we're going to be trading when it comes to those actual interest rate release and the press conference. After that, on Thursday, we have Bank of England and ECB interest rates that will be coming out. So it's going to be a very intense morning as well. That's why we're going to be starting our live sessions a little bit earlier. First, Bank of England is going to release their interest rates, which we're expecting they're going to hold at 3.75%. And then after that, we have ECB coming out, holding their interest rates at 2.15% as well. And then right after that, we have the US advanced GDP that's coming out. And then right after that, it's going to be the core PCE price index. So going back to the advanced GDP, the reason why that is so important to understand is because the fourth quarter of 2025 came out at only 0.5%. And that is annualized growth, largely because the federal government spending collapsed 17% annualized. So weak first quarter print combined with a hot PCE is going to be the stagflation scenario that a lot of these banks like JP Morgan, Bank of America, and Jefferies have been talking about recently, which is slow growth, high inflation, and the Fed can't cut. And that's the most dangerous macro combination for traders this week. If we get that print, then a lot of things are going to change in the market, and we're going to see a lot more volatility coming in. On ECB, they're going to be holding at 2.15%. That's expected. But what has changed from a macro perspective is that the ECB narrative has flipped from dovish to potentially hawkish. The Eurozone inflation is expected to print closer to 2.9% in April, closer to that 3% that we're seeing up top here, which is the highest since December 2023. And that's driven entirely by energy costs from the Hormuz closure. Money markets are now pricing in 2 rate cuts from the ECB in 2026 with a 55% chance of a third. If the ECB statement signals growing discomfort with inflation, then that is going to be a euro bullish catalyst. Then on Friday, we're going to expect to have some thin liquidity or even last Asian session on Thursday, actually, where we have the European and the Asian markets that are closed for Labor Day. So liquidity will be very thin. If you have any open positions going into Friday, just make sure that your stops are set before Thursday's US close. Any questions on the fundamental side?
No.
Okay. And then let's take a look at the market sentiment. Let's take a look at equities here first, starting off with S&P 500, which has closed at a fresh all-time high here. NASDAQ has also closed at a fresh all-time high. Then we have US 30, which closed closer to the all-time high, closer to that 49,000 area. And then also the volatility index has closed at 18.02. Despite, it fell about 4%, despite being in the middle of an active Middle East war with 5 central bank decisions and a peak big tech earnings all hitting this week. So that tells us that the market is not positioned for a surprise. And when the market is not positioned for a surprise and then a surprise happens, and this week is full of surprises, then the moves are going to be outsized. So that's what we need to be ready for in terms of market sentiment and our risk sentiment. Overall, what we're seeing is that tech and AI are in full risk-on mode. Defensives are selling off. Energy stocks are bid because oil is high. Gold and silver are confused because of the inflation paradox that we just discussed. The dollar index is currently sitting at closer to the 99 to low 98 levels, essentially flat on the daily. Slightly soft because peace talk optimism this morning pulled it down, and then it recovered when talks collapsed again by the afternoon. And that kind of intraday reversal is exactly the kind of noise that we're not going to be trading. That's what we need to be extra careful this week, a little bit, be more patient and make sure that we're not getting stuck in any sort of wrong side of the trade, basically becoming the liquidity ourselves. So the key thing here is going to be waiting for the setup that will come after this catalyst. So we're not going to be trading the actual news release, but we're going to wait about 10, 15 minutes after the actual news release and then trade the other side of that. All right, let's start off with the technical side now. So we already talked about US 30, closer to the 49,000 area. So I'm going to mark off, let's go to the weekly. So the current weekly bottom wick rejection, which tells us the support that price has already formed, which is right at that 49,000 mark. We have the current weekly's top wick, but I'm going to bring it up a little bit higher just so that's our range here for this week, which is going to be 49,470 or even 49,500 area since this week just started. Drop down to the daily and you start to see that consolidation a little bit more. Starting last Wednesday, we start to see that the volume died down. And if you look to the left, that's the area of consolidation. So whenever price does break out of it, there tends to be a lot of volume. And that's exactly what we're looking for. even with these quick little fake outs on the daily time frame, if you drop down to lower time frames, you're going to see that there's a lot more volume here that you could scalp or even potentially day trade. Then we're going to drop down here to the 4-hour time frame. Going into tomorrow, today we have the BOJ interest rates, but going into tomorrow, we don't have much coming out from the US besides the consumer confidence. But if we're still sitting in this consolidation leading into Wednesday, then what we want to do is wait for price to break above this 49,300 area and then take that right into 49,470 or even 500. So you have about 170 to about 200 point move to the upside that you can take where price is simply just consolidating. If it rejects into this area, creates a top wick and pushes back down, then you can look for a sell opportunity as soon as price breaks below this zone. One thing that you don't want to be doing, especially when you're scalping, is catching a trade right in the middle of the range of consolidation here. The safest bet, what I will be doing and what I will be recommending my students throughout the week, is just waiting for the actual setups, waiting for price to break out of consolidation, and then trading that move rather than trying to scalp a zone to zone here within consolidation. When I see that the 4 hours consolidating, then I know that the lower time frames are going to be even messier. But as you drop down to lower time frames and you become a little bit more experienced in the markets, you'll be able to catch those exact zone to zone trades. So when you drop down to the 1 hour time frame, this is going to be my zone to zone trade. So if I see that on the 1 hour time frame, price is rejecting this, holding on to a resistance and then breaking below that area and pushing down, then you have another 100 to 150 points, depending on wherever you end up catching your trade, range here that you can still trade. Drop down to the 30 and the 15. But the most important thing to understand here in terms of risk management is understanding what's the limitation of your trade. So if I catch a sell here as price breaks below the support, then I know that the limitation of my trade is going to be right into the zone. It's not at the bottom of the zone. It's not down here. It's not all the way down at 49,000, unless I have some sort of confirmation, whether that's a market open volume or some sort of news just came out and it supports that move to the downside. If I'm looking for buys, then same thing. I'm waiting for a break and retest formation here. I'm not looking for an impulsive trade right when price is breaking out of a 4 hour consolidation, because that could simply just be a quick fake out. So if I want to catch an actual buy opportunity, then I'm going to wait for candle closures here, the next one to give me a break and retest formation, and then continue to the upside. Now here, I understand that the limitation of my trade is right here at this resistance, or at most right into 49,470. I'm not going to try to extend it all the way to the upside and hope for a better trade and hope that's just going to continue pushing if there's no confirmation, if there's no catalyst, especially with US 30, where you have the earnings that will be coming out. You also have interest rate news that will be coming out here in just a couple of days. Let's go over to GBP USD. Let me know if you have any questions on any of these pairs. I'm just going to continue just moving through them. So now with GBP USD, looking at the weekly time frame, you've got your top wick rejection from this week, which is the same one from about 2 weeks ago. 1.358, and it seems like a very strong weekly resistance. This week, we don't have a bottom wick rejection, but what I am going to do is look to the left and find a reference point of where I see a strong support resistance formation. So here it's this for all these wick rejections and candles closing below it. And if I look further to the left, then that was a break and retest formation here on the weekly time frame before price continued pushing down to hold on to a support. Look further to the left, and you see that this is also another support area. So I'm going to make that my weekly support at 1.345. Then I have my resistance at 1.358. Drop down to the daily time frame. Last daily candle closed with a massive bullish top wick rejection, came back, and it closed right at the high of the previous daily candle. So that's where we are right now. If you're looking at the current daily candle, that one has gapped up. So this is where you have the daily candle closure from yesterday. And then today's daily candle gapped up and opened up there. It seems like we're trying to fill in the wick here at the moment, or fill in the gap here with this bottom wick here at the moment. So if price can close above and continue pushing above that zone on lower time frames, then we know that we can look for buy opportunities to the upside. What that basically means is that on the 4 hour time frame, we see a support formation, massive rally up, that rejection that we saw on the daily time frame, candles coming back and closing above that zone, so right into the zone or above. And then you have this new daily candle that just started forming with the bottom wick. filling in that gap. So if we can hold on to a support here, get some bullish candle closures, and then continue to the upside, that is a day trade or even a scalp opportunity, whatever that you want to take, to the upside for about 35 pips. If the candles close below this and we continue pushing down, then we have a sell opportunity coming all the way down here based off the 4-hour time frame into the support. And that could be a corrective move of this entire bullish run up. And that is a range of about almost 35, 40 pips, depending on your entry as well. So for here, just make sure that you guys are extra careful. This is going to be highly impacted by, of course, the Fed interest rates. And then right after that, you have the BOE interest rates coming out as well. Then we're going to move over to EURUSD on the weekly time frame. Same thing, you got a top wick rejection already, which seems to be a strong resistance level at 1.176, previous resistance. And then a support down here, which is the previous weekly candle's bottom wick, since the current one doesn't have a bottom wick. And I'm just looking at whether this is a strong resistance or support based off the weekly time frame. It was a support for about 1, 2, 3, 4, 5, 6, 7, 8 weeks before this candle broke below. And then after that, it was a resistance for about 1, 2, 3, 4, 5, 6, 7, 8 weeks again. So very strong levels in general. We're going to drop down to the lower time frames. Let me adjust this to 1.167. Drop down to the daily. On the daily time frame, we've had a bit of a consolidation here and then a massive rally up early April. Came back, seems like a corrective move that has happened last week. Price holding onto a support here on Friday with a bullish candle closure. This last daily candle left a massive bullish top wick rejection, still closing bullish. And then this new daily candle, unlike GBP USD, it does not have any sort of gap. It just started forming. So we're going to drop down to the 4-hour time frame. If price can hold on to the current support and continue pushing bullish, then we have those buys to the upside. Wait for price to break its own 4-hour high, continue to the upside. 21 pips to about 33 pips. If price breaks below this and breaks below the previous 4-hour low and its own low, then we're looking for sells to come back down to about 17, 18, and then entire range of about 48 pips. 1-hour time frame, very low volume. Obviously, both markets are closed at the moment. Come over to GBP JPY. We talked about how today's going to be a little bit more volatile for GBP JPY and USD JPY, given that they're sitting at all-time highs. You also have the dependency on whatever Bank of Japan's governor is going to say at the press conference. So if I'm just looking to the left here, the last time we had that massive drop in 2008, currently price is sitting right at that top wick rejection. And that is your 215.7 level. If I come back to the current price action, that is where the last 2 weeks price has rejected, and we're trying to break above that. Drop down to the daily time frame. We've had the last daily candle close slightly above it, so that's why I don't count that as a full candle closure and a bullish indication here just yet. We had a gap up again today. This is where the candle closed yesterday. Today, this is where it opened up. Seems like it could be a potential gap fill, depending on whatever Bank of Japan's decision is going to be and whatever they're going to end up saying. So I'm not going to create a line up top here. I'm going to create a zone. What that would tell me is that anything in between, I'm not looking for a trade at all. So that's about a 34 pip range that I'm not looking for a trade in at all. Drop down to the 4-hour time frame. On the 4-hour time frame, I start to see a bit more consolidation, which confirms the fact that I don't want to be trading in that. What I'm going to do is also identify any massive wick rejections, which is right around here, and just extend that zone out to the left, which is cutting right into that consolidation. So this entire thing is actually going to be my no trade zone. I'm going to let price create as much volatility as it wants, do any massive top wicks, bottom wicks in this 50 pip range. But if price breaks below that and it continues pushing down, then we have our sells for quick scalps coming back down for about 41 pips. If we do end up seeing a massive drop, like we were talking about on the fundamental side, then we're looking for about 123 pips sell off to the downside. For buys, we have not come back and revisited this area in over a decade. So that's why, it's going to be very hard to look for clear target areas realistically, but you can catch about 116 for that weekly top wick. And then if price really continues pushing, you are going to need extremely strong fundamentals for that, which means that BOJ governor comes out and says something that makes the yen extremely weak. That's really what's going to push this entire price to the upside and maintain it to the upside. So we're kind of sitting in a risky area right now when it comes to any of these yen pairs. Any questions about that?
Nope, that makes sense. Thank you.
All right, perfect. Someone's trying to come in. Give me 1 second.
No problem.
All right. Now looking at USD JPY here, again, sitting at all-time highs based off the weekly time frame. You've had multiple weeks of price just sitting in consolidation. As we're getting closer to the 160 area, even a lot of hedge funds and a lot of bigger institutions like the bigger banks have come out and said that as we get closer to 160, every time we tap into it, there is this sense of not fear, but more sensitive, more cautiousness around any sort of BOJ intervention closer to this 160 point. And as price pushes above 160, there's a real risk of verbal or physical intervention from the Japanese finance ministry. The current price of sitting closer to this 159, 160 area. So the first support that we're going to be marking out is going to be right here, which is going to be that 158.6. You've got your resistance formation right here at 160.3. If you also look at JXY on a weekly time frame, you see that price is sitting at pretty much all-time lows here as well, which confirms the fact that we are looking at that real risk. Anytime price has dropped so low, we have always seen that there is some sort of BOJ intervention or even from the finance ministry to manipulate the yen strength here. So what we see is that even on the daily time frame, a lot of consolidation formation. What I want to see if I'm going to be scalping this, I want to wait for price to break below the support. My suggestion would be to stay away from USD JPY altogether, rather just watch that for whatever excuse me, whatever is happening for any sort of more risk when it comes to BOJ today and then also the Fed on Wednesday. And just from liquidity perspectives as well, this is two safe haven currencies which are pretty much going against each other in this pair. JPY, we know that's already a safe haven currency. US dollar is still the world reserve currency. So what I have been doing for the last couple of weeks is just watching this pair and just seeing what is happening. Currently, we are obviously consolidating, but if you really want to scalp this pair, day trade it, wait for price to break below the support, the previous daily low, and then push back down for about 52 pips to the upside. You have this resistance here, which the reason why I didn't mark that up there is because you have the previous daily candle open right there, and then it closed down here. So that resistance, if I look to the left, then I see a lot more candle closures here. So what I can do is if I see a push above that, look for a quick scalp, 15 pips, continue to the upside for about 60 pips. If you absolutely want to scalp this or day trade it, that's how I would do it. But my suggestion would be just to stay away from USD JPY entirely this week. You're not really going to have any specific edge at that 160 level. If it breaks through, it could accelerate, but intervention risk is very real there. If it rejects that level after BOJ, then it drops almost 300 points to the downside, and that's what we want to be catching instead. After that multi-day, multi-week consolidation, we have, actually today, if price breaks below this, you're starting off with about 50 pips, continue to the downside for about 155, and you can see a complete 300, 400 pip drop to the downside coming back here, depending on what happens with BOJ. Any questions on that?
No.
Okay. Now, let's go over to gold. All right, with gold, quite volatile here as well. But we have a support formation here, last weekly bottom wick rejection, current weekly bottom wick rejection as well, and then we have that 4662.1 level. Resistance, I'm going to mark it off to the previous weekly candle open instead of the current one because the week just started, so I want to give it a little bit more room. Drop down to the daily time frame. Based off the daily time frame, that resistance checks off as a previous support before a push back up closer to the 5400 mark in March 2026. And then we had another sell-off, price came back up, and we held onto this area as consolidation support resistance. Push back above, consolidated right above it as support for about 1, 2, 3, 4, 5 days, 6 day, drop back down, and after that we've just been consolidating down here. Drop down to the 4-hour. So now on the 4-hour time frame, price is approaching this previous support, resistance, support, all of this here as well. So we could look for quick little scalps to the upside just to tap into this previous resistance. And then if we see that it's going to break this minor structure to the upside, then we can target all the way up to 4774.2. Now, these are some of our key levels, but the important thing to understand here is also whatever happens with the Fed, there's going to be a massive movement here. And that's primarily because of the US dollar strength. So we have a lot that's going to be happening this entire week. Plus you have the headline. Every Iran headline is going to move it, a couple of $100s. So that's what we want to be watching out for. We don't want to be trading in the middle of the range. We want to wait for those proper support resistance formations, making sure that we're not getting stuck in any sort of fake out. So that was for the buy. If you're looking for sells, then the same thing as previous pairs, drop down to the lower time frames. Wait for a clear resistance formation. Clearly, the last 30-minute candle gave you a massive top wick rejection. If this one just makes a bottom wick and flips back up, you still don't have a trade. You want to wait for a proper candle closure above the zone and then look for your trade. But if this candle pushes back down, and then we can see that price is breaking below this support, anything in between, no trade zone, because you can already see that quick fake outs. You can see a little bit of consolidation, drop back up to the 1-hour time frame, and that'll confirm it for you. But your clean sells for quick scalps are going to be below the zone and continue pushing to the downside for about coming down into the support, coming down to about 4669.6 area. So that's for gold. I don't think anyone else is really trading silver or oil, but if you guys are, then we'll break that down in our live sessions tomorrow. Any questions here at all?
No, all good for me. Thank you.
Okay. So quick wrap up on that. Let me just give you the two scenarios that are going to define this week. Scenario A is Fed is dovish on Wednesday. Powell acknowledges the oil inflation risk, but maintains the path towards eventual easing. War gets confirmed. Iran deal makes progress. And in this scenario, the dollar breaks down. Your USD will push above that resistance levels that we were marking off based off of the daily time frame. You'll see that gold will reclaim back above that 4,700 area and continue pushing to the upside, targeting closer to 4,780, 4,800, closer to those levels. You're going to see GBP USD also clearing those resistance levels as well. So this is going to be the high probability base case for the week based on the macro alignment that we have so far. Scenario B is Powell is hawkish. He emphasizes the oil-driven inflation may require rates to stay higher longer. GDP on Thursday prints weak, PCE prints hot, which is the stagflation confirmation. In the scenario, the dollar will rally, EURUSD dips even further down. We start looking for, after it holds on to a strong support area, grabs that liquidity, does a liquidity sweep, we're going to start looking for potential long entries. Gold breaks below that 4,672 towards that 4,580 level. GBP USD also dips. We still go long on the dips in this scenario, but only after the catalyst has fired and price has shown us the confirmation. We are essentially looking for liquidity sweeps from a technical perspective. There is a third scenario. It's the one that we hope does not happen. And that is the genuine breakdown in the US-Iran talks combined with stagflation data and a hawkish Fed. In that scenario, all long setups that we're talking about right now are invalidated. So in that scenario, we're just waiting for our proper setups and then looking for our trades. From a risk management perspective, only 2 trades maximum that we're looking for. 1% to 3% risk per trade. Stops at structural levels. We're not looking for super tight, and we're not also moving around our stops or anything like that. Everything is going to be predefined. Move to break even at that 1-to-1 level. Trail your stop after break even, and no trades after 11 a.m. PST on Wednesday until after the press conference, or right when the press conference starts. But that morning, we're not going to be looking for trades. Friday, we've already talked about it being thin liquidity, so we're not really going to be holding onto unprotected trades going into Friday. So that is the complete weekly outlook. We just talked about the macro fundamentals and everything, but if you have any questions, please feel free to reach out and make sure that you're following proper risk management. It is going to be an economic data heavy week. There is going to be a lot of volatility, and I will see you guys in the next weekly outlook.